Welcome all to this session on mobilizing climate capital by 2030, citizen and institutional action to achieve a just transition. My name is Espen Mellum. I'm with the World Economic Forum, and it's my pleasure to moderate this session, which is co-hosted between the Climate Investment Coalition, Finance for Tomorrow, and KPMG, virtually at the EU COP Pavilion. How to significantly increase the financing for climate mitigation and adaptation is one of the main topics at this COP, as we all know. International climate finance from governments can, of course, play an important catalytic role, but most of the investments to achieve the Paris goals will need to come from mobilization of private finance from different sources. Initiatives aimed at accelerating clean energy and climate finance are therefore very much needed to deliver transformation at the speed and scale required. The needs are huge and the opportunities as well. For instance, a joint report between the IEA, the World Economic Forum, and the World Bank found that clean energy investments in emerging and developing economies alone need to increase by a factor of 7 from $150 billion last year to over $1 trillion annually by 2030. And overall, I've heard mentioned that around $100 trillion of finance is needed for reaching net zero over the next 3 decades. I don't know if anybody knows the exact number, but the fact is that the numbers are huge. And at this COP meeting, we have, of course, seen many important finance-related announcements. The most prominent is perhaps the Glasgow Financial Alliance for Net Zero, GFANZ, who announced that its members have committed to over $130 trillion to net zero, but there are many other announcements that are important. However, the job to align financial firepower with the needs on the ground to reach the net zero goals is far from done. And we need all to work to make sure that capital can meet those needs. This requires further action and innovation. And in this session, we will explore such innovative solutions, partnerships and actions from the Climate Investment Coalition, Finance for Tomorrow, and KPMG through the Net Zero Equity product. We will also discuss how financial institutions, companies, and citizens can contribute to mobilizing and deploying climate finance in a way that they also contribute to a more just transition. To do this, we have a very distinguished panel that I have the pleasure to introduce. So we have Peter Damgaard Jensen, who is the co-chair of the Climate Investment Coalition. Peter, welcome. We have Pauline Becquet, who is the managing director of Finance of Tomorrow. Pauline. We have Mike Hayes, who is partner with KPMG Impact, climate change and decarbonization leader, and also the global head of renewable energy. Hi, Mike. And we have Funke Addison, who is energy risk manager with energy and power specialty team at Marsh. So let's jump into it. Just to mention that participants, you can all ask questions through the Slido, and you can also respond to some Slido polls that I think will be shown. And we can see if you have time to answer some questions here. So Peter, let me start with you. The Climate Investment Coalition works to mobilize significant investments and commitments for clean energy and climate by 2030. Can you tell us a bit more about what is the Climate Investment Coalition and what is it concretely doing to catalyze climate capital from institutional investors by 2030 and ensure that the finance is actually progressing? Peter.
Thank you very much. The Climate Investment Coalition was built upon that the Danish institutional investors, the Danish pension funds in 2019 came together and made a pledge that before 2030 they would invest $50 billion in the green area. And if you take this $50 billion, that is more than 10% of the asset under management that these pension funds have. And based on that, there was formed a coalition between the Danish pension funds, the government, the IIDCC, the Institutional Investors Group on Climate Change, and also some other financial institutions. And the discussion was that building on the Danish initiative, this should develop into the rest of the world, and being part of the Nordics, we started there and got nearly all the Nordics, got all the Nordics on board, and also started to discuss with our colleagues in UK. And we could announce at the beginning of this COP that the 50 billion now was 130 billion. So already in 2 years, we had more than doubled the amount. And in some of the countries, this was really a big part of the asset under management that was going into the green area, and in others, it was less. But we hope to continue with that. We're not only asking the pension funds or the institutional investors will come forward with what they want to invest before 2030. We also want them to give examples on in different areas. It can be in green bonds, it can be in renewables, it can be in energy efficiency in buildings and so on. And that's actually so that we can learn from each other, because some are really front runners in this area and been investing in the green area for many years, and some are coming into the markets. So it's also to inspire each other. And we hope by this to be able at the next COP to come with an even larger sum from the institutional investors. We are going to work on in UK, and we also hope to get our US colleagues on board. And this is actually meant to show that that the financial sector, and you mentioned also that at the beginning, we are going to be part of this solution, and by helping each other and inspiring each other, we can bring huge sums to the market. I think one thing that's a little bit different from what I have experienced, and I have been part of this discussion for the last 5 or 6 years, is that we actually follow up on these pledges. So every year you have to report how far you have come with your 2030 goal. And we already have the reports from the Danish institutional investors for the first 2 years. And as I said, the goal was $50 billion, and they have already invested 19 billion. So they are actually a little bit ahead of the curve. And we hope also by that to inspire others that it is difficult if you're going into the green area and you're a newcomer. But if you set up the right teams and you also get the competences, it's actually possible to get quite huge investments also in the short term. One thing I actually see for the moment, because I think we will see, as you also, we had defense, we will see quite a large, hopefully quite a large mobilization of money in the coming years. And I have a little bit of a fear that we will actually miss projects, especially in the developed world, because there's a lot of planning going on in EU and US, but planning is not enough. The different projects have to reach a market, and I actually think that the investors are going to be ready. And I will, especially in Europe, you can say that for the moment we have a kind of energy crisis, and we need more green investments to overcome that crisis. Where I really see the problems in the coming years is that most of these investments are going into known technologies. In the renewables area, it would be wind and solar, both wind on land and offshore parks. But we need more investments to go into new technologies, and I think we as investors should work on that. We are used to invest in the venture area. And I would see some of these new technologies as kind of venture investments. Maybe in the growth phase, they will be larger. And the other area where we haven't really got where we should be is in the emerging markets. I think many investors think that the risk is too high. First, they're going into a new green area. Secondly, they're going to do it in a part of the world where they're not very used to invest. So I really welcome initiatives that can crowd in private investors. The pension fund I came from have done some investments, but it has been difficult and it has been risky. So we have to find solutions there. Thank you.
Thank you so much, Peter. That's very, very rich. And I think one of the things that really stood out at this COP is the real push and commitment from the institutional investors. So not only are they pledging money, they're also, as you say, tracking their pledges and also putting pressures on others and opening up for collaboration. I think this is certainly a good momentum. You said something about which technologies and areas that you are investing in. What's the current gap? Could you maybe elaborate a bit more? Your coalition has now committed or pledged 130 billion US dollar. That's a lot of money. Where do you see that money really flowing and potentially also combining with other source of money? By that I mean, will most of it flow into advanced economies, or do you also expect some to flow into emerging economies? And in terms of technology areas, do you really see a movement now beyond solar and wind and perhaps energy efficiency into some of these new areas such as clean hydrogen and others? Any thoughts around that, Peter?
Yeah, most of them is still in the traditional areas and still in the developed world. I see some that are looking at new technologies. I know some investors already are investing in storage because we need that to actually also to do the existing to make the existing investments better. You need more storage in the system, and I think it will come. Power to X or hydrogen, that's more difficult because it's still an early technology, but I hope we can be part of it. I think at the moment we still need the public sector to chip in because it's still too expensive. But it is a little bit the same process we had in the early days with the wind and solar, and I think we can use some of the ideas from there. So I'm not so pessimistic there. I actually think that the biggest difficulty is actually to get the institutional investors used to investing in emerging markets. And I don't have a lot of good examples on how that has been done. And investors is like anybody else. Some they want to be front runners, but in many cases they also want to be followers because they think it's more safe. So we need some good examples there, and I hope actually in the CIC we would put focus on the emerging market for the next coming years, and hope to bring up examples and hope to and we will also track how much of the investments is actually going to the emerging markets, and by that we hope also to create a special momentum with that in focus.
No, that's great, and that's certainly very much needed. And I fully understand that pension capital might not be the capital that is looking to take most risks. But as you venture or explore into some of these new areas, Peter, what are those types of players that you're looking to collaborate with? Are they more on the government side to partner with, or is it more on the private side to reduce those risks that you to have an attractive risk-adjusted returns ultimately in some of these new areas?
And if I look at my experience until now, and I mean, I think many investors would be open for ideas. I think the public sector, and it could be both the public sector in the developed world, governments in the developed world, but also governments in the emerging market. It's important to know if you are taking some kind of political risk, because that's very difficult for a pension fund to handle. It is also important if you can get investors from the emerging markets on board. Having local investors on board is always something you would like as an international investor. And then I think the development banks, the World Bank, but also the regional banks can play a role here because they know the market better than we do. but there can also be other private players that might come in. The situation is one good thing is actually the situation is better today than it was 4 and 5 years ago, because I have seen the first experiments being done in different countries and by different institutional investors. But if we look at this, how large these investments are going to be, we need much more ideas and we need much more speed in this.
Yeah. That's great. I may come back to you later, Peter. Let's move on a little bit, if that's okay. And I want to bring in Pauline Becquet, who's the managing director of the Finance for Tomorrow. And Finance for Tomorrow brings together, I understand, all public and private and institutional players in the Paris Financial Center. And Pauline, it seems that your center and the Paris Financial Center is particularly involved in promoting the just transition. Can you talk a bit more about what is your roadmap and can you present this coalition of investors that you launched very recently?
Yes, thank you very much, Espen, and thank you to the EU Pavilion for the opportunity to present the Just Transition Coalition. So briefly, Finance for Tomorrow, as you said, is a branch of Europlus, and it brings together public and private institutions to work towards the sustainable finance. We have 86 members working on this topic of sustainable finance. And last June, we launched an investor coalition on just transition. We have now 21 investors, asset managers or asset owners that are part of this coalition, which represents 4.1 billion euros of assets under management. And so we have 3 main objectives with this coalition. The first objective is really to engage with companies, to increase the dialogue on the just transition topic with companies, to better understand how they integrate the social aspects of the climate transition, and also to talk with them about their reporting on just transition. And we would like to develop new indicators to better emphasize the fact that the social consequences of the ecological transition are taken into account by the companies. The second objective of this coalition is to develop an academic partnership, because we really think this just transition is an emerging topic with maybe social consequences we are not fully aware of based on the climate and ecological transition. So we need researchers, we need the academic institution to help us as financial actors to better understand these consequences, and also to think about what are the good information to be reported by the company. The third axis of this Just Transition Coalition is to develop a data hub on just transition. So we launched on the 3rd of November, the Finance Day of the COP26. We launched our website of the coalition, and you can find in this website a first set of data to date provided by Moody's ESG solution, which are scores based on indicators that could reflect issues linked to just transition. So we have both environmental and social indicators in this data hub, and this is in open data. So the investor members of the coalition can use also this data to implement their engagement strategies. And but the idea is that we can improve the data published in this website and this data hub. So we are also working with the World Benchmarking Alliance, and we hope they will help us to enrich our database. And also we invite all companies that would like to develop new indicators to to provide some information in this database. The idea is not only to have environmental and social indicators. The idea is also to develop new indicators that could better explain how they manage the just transition. So to date, the 21 members of the coalition are mostly French investors, but we, of course, invite all investors that would like to join this work to join the coalition. Also, I would like to add that we, in parallel of the coalition, we also published a series of papers based on the stakeholder of just transition. So we focused on workers, we focused on local territories, and we focused on consumers. And in this paper, we are trying to address what are the issues for this stakeholder of the just transition.
Thank you, Pauline. That's fascinating, and I think this effort to also include just transition aspects is also very important and innovative for myself, but also I think a few listeners would like to understand a bit better in terms of what do you really mean by just transition, and perhaps how does that link to the ESG metrics and ESG reporting? Is it basically just transition part of the S in the ESG, or do you see it differently?
No, thank you for this question, because it's very important. Actually, it's not just the S of the ESG. The just transition is the idea to minimize the negative social impact of both climate change, but also the transition to sustainable economic models. For instance, we know that if we close coal mining or coal power plants, we need to think about the workers in these power plants, and we need to offer them alternatives to have new jobs. So in all the sectors that need to change their business model or that need to convert, we need to minimize the negative impacts. And just transition is also about maximizing the positive aspects of such a transition. For instance, again, with the example of jobs, is the fact that we can create new green jobs in new sectors or in renewables, for instance. So the idea is really to first minimize the negative social impact and then to maximize the positive aspects. So it's not just to tell, okay, you have a good training policy or good diversity policy in your company. The idea is really, okay, you need to transform your business model to achieve the Paris Agreement, the objective of the Paris Agreement. So you need to make some to take some decisions that will affect your workers, but also the local communities, or maybe the price of your product. So that could raise some problem of accessibility. So how do you manage these consequences? How do you take it into account into your climate strategy? There is a strong focus today on the climate strategy of companies, and of course it's necessary. The idea of the just transition is really to say, okay, this climate strategy, you've decided to put this action in place to reach the objectives of limiting global warming, but it will have social consequences. How do you take into account, and what do you do to minimize these consequences? Many stakeholders could tell just transition is just a government, a public authority issue, but we are convinced in the coalition that it's also a responsibility for companies, for financial actors, to take into account these consequences. Of course, the states and the governments must have the right policies to accompany this transformation, but we also have a responsibility toward this topic as financial actors.
Yeah, great. And I know that the Paris Financial Center and Finance for Tomorrow is, ahead on many of those issues. But how do you see this becoming mainstream? Do you see this first developing in a hub like Paris, and then, being adopted by others, or do you see this needs to also be developed globally? These types of standards in order to become mainstream? How do you see that the journey there?
Actually, I think this is a global issue, of course. It was already stated in the Paris Agreement. The Paris Agreement says that policy must take into account the imperative of a just transition of the workforce and the creation of decent work and quality jobs in accordance with nationally defined development priorities. And in 2019, the European Union also announced a mechanism for ensuring that the transition is as fair as possible. So we believe this is a global issue and that there are many initiatives that are currently working on just transition. We need to gather our efforts to reach these objectives. Well, we are not the only one. There is also, for instance, the UK Alliance for Just Transition. So we are not in France as the only one to work on that topic. But maybe it's an issue that has been more integrated by financial actors in developed countries. But this is a global issue and mainly an issue for emerging countries. So we also need to make sure that this is implemented in the right geographies and not just a European issue.
Yeah, and I think that's a nice segue to talk about the net zero equity concept. And I also saw a question on the slide, or how do we make sure that some of the least developed countries are not left behind in this journey? So turning to you, maybe my case, net zero equity is a new investment concept designed to mobilize impact capital that is prepared to accept highly uncertain financial returns to finance some of the most challenging elements of this agenda. Before we go into discussing exactly what it is, can you explain what is the problem that you're trying to solve, or the concept is trying to solve here? Mike, please.
Sure. Good afternoon, Espen and everybody. I'm delighted to be here. In fact, Peter's session actually identified the problem very, very well. Here is the reality, Espen, and I'm currently at COP26 in Glasgow physically, and this particular issue has come up over the last 2 weeks. The reality is we've had the 130 billion GFANZ announcement, which is an incredible announcement, which I very much welcome. I think the initiative by Peter and the institutional funds is absolutely fantastic. However, there's a fundamental problem. That money is not getting to those parts of the agenda that actually Peter referred to, and there are two in particular, and I was delighted that he actually brought innovation into this as well. The first part is what we call developing countries, global south, use all the expressions you want. The reality today is that if I'm a project developer trying to do projects in those countries, particularly high-risk locations, I am struggling to get the capital. You would think that multilateral capital is there, and it's there up to a point. But as you know, Espen, through some of the work we've done with the World Economic Forum on thinking about these broad issues, sometimes the risks are so high in some of these jurisdictions and for some of these projects that even that sort of blended finance, concessional finance, whatever you want to call it, it just isn't available. And that, for me, is a fundamental problem. And it's driven really by, I think some of these risks have been touched on already by some of the speakers. It's a mixture of political risks, FX risks, lack of infrastructure, policy uncertainty. But I think there's a fundamental point that I want to make, Espen, which is there's a difference between real risks and perceived risks. And I know from talking to colleagues, particularly from Sub-Saharan Africa over the last week, and we've been debating all of these issues extensively, one of their great frustrations is the lack of understanding of investors in developed countries about the reality of these risks. We're not saying they're not there, but some of the return expectations from investors, in developed world are so expensive that actually it challenges the affordability of these energy projects if they were ever to be built. So we have a systemic issue today, and where this manifests itself most of all, Espen, is the fact that we still today have 800 million people plus without access to electricity. Peter then referred to a second part of the agenda, which actually completely dovetails with what we've been thinking about with net zero equity, which is the innovation agenda. We need to innovate like never before, right across, and it's not just technology innovation, it's business applications and various other forms of innovation. But a bit like the Global South issue, it is still perceived as high risk by investors. And that's something that we need to sort of change the way we think about that, or in both cases, find a different type of investor that actually will take on these risks. So I hope that sort of answers the question about the problem statement, Espen.
Thank you, Mike. And of course, the World Economic Forum with KPMG and Marsh Specialty and others have been involved in developing this concept of the net zero equity, which is not yet implemented. But can you explain a little bit more sure. What the concept is, then, Mike, and how it can have an impact?
Yeah, and I'm delighted you said that that both Marsh and World Economic Forum have been involved. It's been incredible. In very, very simple terms, if we're not going to get this money from governments, if we're not going to get it from public sector multilateral banks, and we're not going to get it from private companies or private capital, I started to ask myself, where are we going to get it? And actually, the solution dawned on me for reasons that I'll go into in the next couple of minutes, Espen. But while there's a number of different sources for this type of very, very high risk capital, I actually zeroed in on the concept of global citizens and what net zero equity is about. And it's sometimes slightly incorrectly referred to as crowdfunding, but it's probably a good way to explain it. What we're trying to do with net zero equity is we're going to go out and we're going to raise certain amounts of money from hundreds and hundreds of millions of global citizens. Now, I know everybody listening on this presentation will think that it's the end of a long day and I've lost my mind, but we will explain exactly how we're going to get there. There's a couple of key features that I want to highlight, Espen. First of all, the amounts of money that we're going to ask for are incredibly small. They're anywhere between $50 and $300. And importantly, we're going to ask this, it's to not just the young people, not just the old people, but people in every part of the world. We have actually garnered quite a bit of interest from the developing world as much as the developed world. But the second part is the critical thesis, and we can delve in later as to where exactly we are. The thesis around this investment is we are going to say to investors, we would like you to contribute and purchase net zero equity, which is a form of an equity instrument. We're going to be very transparent, and we are going to say this is going to be put to use in a high risk projects right throughout the developing world, both into wind and solar projects, but also microgrid and other infrastructure projects, and also to support the broader innovation agenda. So why would they do this? Well, first of all, the amounts of money are very small. That's the first point. Secondly, and most importantly, we are going to say to global citizens through all parts of the world, this is about creating impact on the climate agenda. There are lots of people, and I would include myself and many others, as in our individual capacity, we are very concerned about what's happening on climate change. We see the sort of focus on 2030, particularly in recent times, but yet we can march on the streets and we can complain to governments. I'm trying to take a slightly different approach and say, you as a global citizen, you don't know where to go or how to contribute. And we have developed this product or idea, whatever you want to call it, specifically to target these global citizens. And it's the combination of a financial return, which you will get, the hope is that you will get it at some time. I'll come back to the management of the money in a second, but the combination of the somewhat uncertain high-risk financial return combined with social impact. And I suppose the thesis that I've articulated, and you've heard it many times, Espen, is that in a post-pandemic world, there's a new sense of purpose right throughout the globe. And we're hoping to actually sort of catch that trend, or whatever you want to call it, and get people to invest in this project. A couple of other points. We are going to appoint a globally recognized investment manager. This will be done on a proper basis. It will ultimately have to be some sort of regulated product. The investment manager will issue the equity instruments, and we will have a fund structure where the proceeds will be used to be spread across multiple different projects. in different regions in order to create the benefits of diversification risk. And a couple of points before I wrap up this section, Espen, that I wanted to emphasize. I've said already, this is equity. This is really designed to catalyze the more senior forms of finance. Think of it this way, for every $10 we can put in, it can catalyze, somewhere between 60, 70, maybe $80 of more senior finance, because this money is taking the risk. And the whole concept is it's absorbing all the risks I spoke about, the currency risk, the infrastructure risk, the political risk. This is money that investors have said, I am prepared to lose this. And by doing that, we're hoping to bring other investors in. Deliberately, it's not a charitable donation. It's very definitely structured as a financial product, because we actually hope, by managing the risks, by actually playing on the fact that some of the risks that are perceived are not actually real risks, and also through professional management of the monies through the investment manager, we're actually hoping over time that we will deliver returns, but it will take some time. And you might ask, Espen, where did this mad idea come from? It came from the fact that I have a deep love of history, and one of the things I knew about for many years, and I started to think about its application to the climate agenda, is the concept of war bonds. In the First World War and the Second World War, countries issued these war bonds to the general public, where the chances of getting your money back were very, very slim. But at a time of global crisis, people did it. And what was fantastic is that the war bonds did pay out eventually. Now, inflation would have grabbed all the gains, but people invested not to get a return. They invested because they knew they had to step up. So in conclusion, Espen, we've actually tested this idea extensively with stakeholders all over the world, but particularly with the people on the ground in Sub-Saharan Africa, in South America, and other Southeast Asia. The message we've got is very, very clear. This type of equity, which is deep, what we call deep first loss equity, has the potential to be a game changer and attract in other forms of capital. I think that piece of it we've cracked. I think we've cracked the structural piece. The real challenge, and we'll get to it in the rest of this discussion, is how do we go now and make this happen and actually get to the investors?
Yeah, and thanks for that, Mike. And it's good to hear that we can learn from history to solve some of the future challenges as well in a different area, obviously. And I would like to dig a bit more into the thinking behind mobilizing such large numbers of individual investors that you refer to. To achieve that scale, you would have to, of course, to mobilize that from many sources. And that must represent, of course, a challenge. Funke Addison, you're from Marsh Specialty and been very much involved in developing this concept. And from your perspective, can you explain a bit more how net zero equity can get traction through global corporations and others, to targeting perhaps employees and in particular customers? And also great if you can comment from an emerging market perspective why this idea could be meaningful. Funke, over to you.
Okay, thank you, Espen. Hello, everybody. Good morning, afternoon, evening. So yeah, just like Mike has said, this concept is about the global citizen, the ordinary person ordinary people coming together and being part of the global solution. And if you can imagine, say, a company with 1 million employees, for example, and if you can engage 25% of them, which is about 250,000 people, if each one of those people donated $300, that in itself is $75 million. Now, if the company itself matches that, say 1-to-1, you already have $150 million. Now, multiply that by, 10, 20, 30 different global multinational companies in the richest countries around the world. You have a lot of money that global citizens have got together, which can go towards community funding in emerging economies, for large-scale project funding, like microgrids or small grids and medium grid type projects, that people that don't currently have access or have limited access to capital funding or high cost of capital can then access. Another opportunity where we see this can work is for consumers. So when you're a customer and you're buying a product, for example, at the point of sale, you could be asked to invest, $50 or up to $300. And if you can get 100 million people in that scenario to donate $300 each, that is already $30 billion. So you can kind of start to see how all of this global movement of people, the more people donating small amounts of money, which is, we think $300 in the advanced economies is something that most people will, when you're talking about climate change, most people will think, okay, that is a sound investment. That's a lot of money, $30 billion. And again, the more people get involved, the more money, and then you kind of spread that across middle income economies and emerging economies themselves. Then you are really talking about people power, global power, and huge sums of money that gives just that access to people who don't currently have the opportunity to access capital for renewable energy. And Espen mentioned earlier about emerging economies, and I will talk about Sub-Saharan Africa again, which Mike mentioned earlier. So for example, if you look at a country like Nigeria, which is where I'm originally from. If you look at a country like Nigeria, which has got 190 million people. Now, the population of Nigeria, only 55% of them have access to power. So 45% don't have access to energy. Now, even of the 55% that have access to energy, the supply is inefficient, it's unreliable, and it's very expensive. So that means a lot of people in Nigeria depend on diesel generators or kerosene generators or things like that, which is, high carbon cost of energy generation, very, very expensive because of the cost of fossil fuels and the rest of it. So in that kind of scenario, what we're saying is, if these people could have access, if they could, the net zero equity product could give them a lower cost of capital because they're equity back, then that means that they can actually access funding for residential solar, for example, or mini grids or microgrids at a lower cost, which means that they can not only become innovators themselves and become power generators themselves, but even in that case, they actually reduce the greenhouse gas emissions associated with diesel. So overall, everybody helps to solve everybody else's problems. And the ordinary investor in an advanced economy gets to be an investor as well. So literally, it's about everybody crowdfunding in a way to being an investor to help other people to move up in the world, which kind of goes back to what Pauline was saying earlier about a just transition. It is about everybody helping everybody else to move up by giving them access to capital, cheaper access to capital.
Yeah, great. And of course, very important here, I suppose, for convincing some of these small investors to actually invest is this measurement of impact. And it goes a bit back as well to what Pauline mentioned before, I guess, in terms of just transition and some of these metrics. Any thoughts around that, Funke? And how can you measure the impact of this in a way that gives confidence to those multiple investors?
Yeah, absolutely. I think, just going back to what Mike said earlier, there is no guarantee of a return of investment in the short, medium term for the NZE product. And it is designed that way because we want to focus on the social impact and the climate impact and the just transition impact of the product. But you have to be able to measure this. And one of the ideas that Mike has is the blockchain technology, which most of us are familiar with, because it is quite secure. Most people are aware of it now, and you can use it to easily track how funding is making a difference. So the idea is that we will track, the megawatts of energy installed for grid capacity. We'll be able to measure the amount of energy interconnections. We'll be able to measure the amount of tons of CO2 that are abated or prevented from being emitted because you've moved people from diesel generators, for example, to a residential solar, number of new jobs created, number of jobs that are created for women, new technical apprenticeships, because obviously if you're creating all these new renewable energy solutions in emerging economies, then you need the supply chain, the expertise of people able to repair, able to supply, able to assemble solar panels. And by doing that, you actually start to create economies around these new types of power generation systems. And the blockchain technology allows you to be able to track that, which then for the NZE investor becomes the return. So your feel-good factor, if you like, the ability to know that my $300 has gone specifically to do this somewhere else, and this is the evidence, and it is still doing well. And then in future, the long term, obviously, there is the chance that you might get a return on it, but that is not the sole reason for the investment. The investment is about social good and tracking the good that your investment has done from a climate perspective, but also from a social justice perspective.
Yeah, soon we're bringing this part to an end, and then we open up for maybe a joint question to everybody. But before we go there, Mike, what are the next steps here to take this from being a good idea and solid concept to actually implementation?
Well, COP26 actually has been great for me and the team, Espen, because it's been a chance to actually meet lots of different colleagues, particularly some of the African institutions who, and when I shared this idea, what they said is they had actually been thinking about doing something, but had no idea how to scale it. So I am absolutely convinced that we have something here that could actually be very, very important. But the real challenge is to get the investors. So the plan is, rather than do this all in one big go, Espen, we've already identified a number of pilot projects in countries like Rwanda and various others with some really brilliant other external colleagues who are working with us. And now we want to take it back to to use the technique that Funky went through about global corporations who could be based in the US, in Europe, but equally could be based in right across the African subcontinent. And one of the really inspiring things that's been happening in recent months, and it's been reflected in some of the things I've heard at COP26, is companies are not just thinking about their own net zero commitment, Espen. They're thinking about how they can do something over and above this to move the dial on climate change. And actually, this is the perfect answer. So for me, the next step is, if there's any global corporations listening, please feel free to call me. I assure you, I'll be in touch with you, or one of the team will be. We're actually going to go out and look for some sponsors for this. It's the key next step. We've already started on the journey of identifying an investment manager. And I think, the other point I'd actually make, Espen, is a really important one. This is a collaboration. Yes, this is something I dreamed up initially, but I couldn't have got it to this place without the support of the World Economic Forum and Funky and her team. And, and then thankfully, we've broadened the sort of the coalition that's looking at this into colleagues and stakeholders all over the world. So far, we're getting fantastic endorsement and support. The hard work will come over the next 6 months, but I very much hope that by the end of 2022, we would have live projects funded with net zero equity.
We just take maybe 1 minute to answer a question that came through slide on this one. If either yourself or Funke both want to have a 30-second on this, how to make the net zero equity work in highly unequal markets, how this should be positioned to investors, both in corporate and individual levels.
Yeah, I'm not quite sure I fully understand the question. I mean, the whole point, let me take the second part first of all. This will be pitched very much around individual citizens. And while in this presentation we focus on the use of corporations, we're actually looking at a whole bunch of other techniques. We're talking about looking at media and social influencers, global networks of individuals across different strands of society. So there's going to be sort of lots of different ways to get to people. And if corporations want to invest in this, please, by all means, and Funky mentioned the concept of corporates matching what their employees or customers do. We're not going to turn away money, but we're very, very clear on the concept. In terms of unequal societies, again, it depends on what is meant by that. We are focused really on those parts of the world on this climate agenda that are starved of capital today. So almost by definition, we're going after, think of it as the social justice, climate justice, but we're going after, where we really need to build new sustainable energy and climate projects to really move the dial. And I've already identified the areas. So that's probably the best way I can answer the question, Espen.
Okay, yeah, Funke, if you have any thoughts on that later, you can also come back at them. But let's move on a little bit and remind participants as well that you can still ask questions through the Slido to all panelists. Let me go with a broader question and invite perspectives from all panelists, if you want. So both climate change and the policies implemented to address it have wide-reaching implications, of course, for health, employment, productivity, and the distribution of wealth. And an effective climate response must naturally take these dimensions into account and provide an answer to this question. How can you really achieve a transition that is acceptable to all? I don't know if acceptable is part of the just transition concept, Pauline, or whether that's yet another element that we need to build in here to the investment. Maybe you want to start on that, and then I go to Peter next.
Okay. Yes, it is acceptable. Making the transition acceptable is part of the just transition concept. Actually, I found the presentation of Mike and Funke very interesting, because my answer to that will be, we need to be innovative. We need to bring citizens into the debate, to include them, and we need to think about new financial products and innovative products that can help to answer these challenges. So I can share some examples in France that are very local, but that could explain how we need to be innovative. If I talk about energy, for instance, and about the energy efficiency of buildings, it's really important for both helping to decrease the greenhouse gas emission, but also it's a way to improve the way of life of citizens if we renovate the buildings. And so we need to find a way to finance this energy renovation. And so in France, banks like Crédit Agricole, Société Générale, or BNP Paribas provide some zero rate eco loans that help citizens to finance the energy efficiency renovation as they need in their housing. And this product is also a public backed product. So we need also such kind of products, maybe with blended finance, with guarantees for the public state, to help a financial actor to reach these objectives. But we really need to involve the citizens in this journey to be sure that no one is left behind.
Thank you for that, Pauline. So innovation still needed here, leave no one behind. Peter, what's your response to this? How can we make the transition acceptable to all, and how do you see the role of institutional investors potentially in that journey?
I think that the institutional investors, because many of us actually have ordinary citizens as members or beneficiaries. I mean, the pension fund I came from was nurses, midwives, and so on. So we of course have a responsibility on the way we invest our money, also in the social area. And there's two things I think you can do and should do. The first thing is that when you are going in and, for instance, building renewables in an area, you have to be sure that this also creates jobs in that area as far as you can. And that's both in the construction phase, but also when there's operation and maintenance. You have to be aware of that. And then secondly, you have to have a dialogue with the local communities, because it might have some influence in the way of life they are going to have. So I think as a responsible investor, you are going to look after that. I think where the big problem is coming is that if you go into, for instance, some of the European countries and create renewables, and by that you take out the fossil fuels, in many cases the coal are actually imported from other parts of the world. And for you as an investor, it's difficult to do something in that part of the world. If I invest in UK and the coal is coming from somewhere in Latin America, as an investor, it's not your job to go there and create jobs for the co-workers. So we can solve part of it, especially if it's within the same community or country. But if it's cross-country, then it's actually difficult.
Yeah, thank you for that answer, Peter. And I'll turn to Funke. Any thoughts from you, either building on comments from Pauline and Peter on this, or anything else you want to add in terms of how you can make this transition acceptable for all?
Yeah, thanks. Yeah, I think what Pauline said about innovation is really important, because obviously most people are inherently altruistic. Most people care about the planet. Most people want to leave a sustainable planet for the future generations. And I think it is up to us who are able to do it now to create those solutions that will help in making the planet habitable. And sometimes there's a financial solutions, there are technical solutions, there are all sorts of solutions that people are talking about. The way to make it acceptable to people is to be, I think, honest about where we are and where we need to get to and how quickly we need to get there. And when people see what good their investment, if you like, whether they are institutional investors or they're just ordinary citizen investors, when they can see what good their investment is doing, I think that will encourage people to see how acceptable it is for us to keep this planet intact. And I think when people look, when you kind of see a picture of Earth from space and you see that thin blue line that just protects all of us, and everything we emit, all the CO2 we emit, all the SOxes and NOxes and all the toxic chemicals, all stay here. It's not going anywhere. And the more we put out there, the more it just stays with us, and eventually it's gonna, affect us, and it's already affecting us. And I think being honest about the science and what it is actually doing and how the money that goes into this is actually trying to keep us all alive is the way to make it acceptable to people. Honesty and science.
Yeah, I'll go to Mike, but just alert all the panelists that I have one last question, and you will each have about 30 seconds to answer, because in 4 minutes we have to close. And the question I would have to you is, what have you seen so far at the COP meeting that you think can make a real difference on climate finance, or something that's influenced your own thinking in that regard? But Mike, first to you, maybe you want to answer that question and how to answer how to make the transition acceptable for all.
Well, let me just comment briefly on the previous question. I think it was mentioned already. For me, actually, the climate agenda is not just about policy, innovation, and capital. They're the three pillars we normally look at. I've just literally issued a report last night on this. There's a fourth pillar on the climate agenda, which is people. And until we and organizations pay attention to what we call people factors, we're going to fail on this. And inherent in all of that is the challenge that I and others will put to the educational establishments around the world. We need to sort of really rethink our whole educational system, both to educate people on the reality of climate change, number one, and number two, to prepare students and graduates from their primary education upwards for the new skills and talents we're going to require on this agenda. So I'll leave it on that question. And then very quickly, I know you're out of time, Espen. For me, the big takeaway from this COP event has been business actually coming to the fore. Governments, for reasons we all understand, have to move at a particular pace, and government action, particularly on policy, is critical. We know there's all sorts of challenges about getting some sort of global agreement on climate at this COP. But what has really struck me is corporate organizations around the world, because they're responding not just to government pressure, they're responding to investor pressure, customer pressure, and employee pressure, are actually moving much quicker, certainly over the last number of months. And based on what I'm seeing in COP, I'm actually very optimistic about the role organizations will play. And in particular, I once again make the point, they are not just thinking about their own net zero story, they're thinking about how they can use their power as global institutions, or whatever word you want to use, to make a difference.
Yeah, thank you. We literally have less than 2 minutes left. So Pauline, a closing comment from you, and then Peter, and then Funke.
Sorry, I had trouble with my microphone. Yeah, maybe a concluding word would be the importance also of transparency. We've seen lots of commitments regarding net zero, but we should not stop at this commitment stage. We really need to act quickly and to decline quickly these commitments. with a calendar that is relevant regarding the challenges. And so maybe what I retain from all the announcements are more the announcement about transparency, because we need to track collectively that we, all the financial actors, all these commitments indeed help us to progress towards the Paris Agreement objective. So for instance, there is a global initiative that has been announced, which is the One Planet Data Hub, which we would like to gather all the tracking initiative of the transformation of financial flows. And I believe this is really important to show that we do not just stop at the net zero commitment, but we indeed are on track to reach the Paris Agreement objectives.
Yeah, and Peter, over to you, but can I ask the technical team to show the slide of poll results while we close? Peter, one last comment from you, quick.
Yeah, I agree with Pauline that we actually need not just net zero, but we need action now, and we need tracking. And I think that we are going in that direction, but hopefully we'll get more concrete things coming forward to 2025 and 2030.
Thank you. And Funke, and we see the results here. I would say it's quite surprising that the finance sector got no votes there, but so be the judgment from the audience. Funke, last word to you.
No, I mean, I think everyone said quite a lot, and what needs to be said. I think I'll just reiterate what Mike said earlier with regards to, the global citizens being the solution to this, and the fact that we all need to come together as a global population to solve the problems of climate change.
Yeah, with that, I would like to thank the audience. I would also like to thank all the panelists and also the EU Pavilion for hosting us today. Have a great rest of your day and a good rest of the COP meeting. Thank you.
Thank you.
Thank you very much.